Stocks dropped to 6-month low on fears of more war continuing in the Middle East. Short-term downtrend continues, but stocks are indeed oversold, at least on the short-term charts, and they're approaching longer-term oversold levels as well. Dow Jones, for example, hit an oversold level. I'll show you that chart. We are again seeing another oil buy signal, and oil companies hit all-time highs. This is the only bright spot in the index, S&P 500 index right now, is the oil companies. We'll kind of dive into more deeper Forex analysis. Yen is very close to a 36-year low, and Canadian and Australian dollars are breaking down versus the United States dollar. This is all adding to the push of a dollar going higher, stronger and stronger, and this is weighing on precious metals. All this and more in today's edition of MasterChartsTrading.com. Market recap for Friday, March 27, 2026. Please don't forget to hit the like button, share this video, make a comment. I have been getting a lot of comments. Thank you again for those. I've been trying to get to most of them and continue making those comments. They are making this video more available to a wider audience, and this is a very good thing because more people will see it. So thank you very much for those likes, shares, and comments especially. If you're a subscriber, stay tuned. We have a kind of lean looking members only video recap. Very few speculative stocks, a bunch of ETFs, and we'll also look at market breadth in the members only video in more depth. I might show a little bit in the general video. So stay tuned. Not really a lot of buying opportunities, but at the very least there is some hope that we're close to at least a bounce. Okay, throughout the presentation I'll be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. There's green, blue, red, and yellow lines. They're available for this interface, TradingView.com. You can have them on your chart. So just sign up on my site, MasterCharts Trading, and I will open the door for you on TradingView.com. We are currently looking at the S&P 500 index, and notice that we broke the first support right there, actually even a day earlier, a few days earlier, like March 13th, but definitely March 18th. Actually, I'm going to kind of zoom in. It's interesting action there. Notice that we retested this break right there on the 23rd of March, failed, and then plunged lower. So we are currently approaching strong support. I call this strong support at the blue support resistance line. So strong support just means that you want to consider buying there once the bottoming pattern is in. So it would look something similar. So for example, here is that when President Trump began his term in 2025, we had a drop, and this is technically speaking a buying signal right there on the 7th of March. It was unsuccessful because notice we failed way below the yellow line. But then a few days later we came back and recaptured the blue support resistance line. So this is the same situation or similar situation. We're now seeing a pullback towards the blue support resistance line, just like when we saw back here in February of last year. This was all-time highs back in February of last year. We got a pullback. We got a bounce, it didn't hold, and we collapsed lower. So can this similar thing happen? There's no way to tell. We could bounce on the first bounce, or we can fail and continue lower, or do something entirely different. So there is no way to predict it. However, the strong support implies, this blue support resistance line implies that we're definitely oversold at the very least. And basically we're waiting at this point how low this will go. So we're about 2%, maybe 3% away from this blue support resistance line, which is at 6,100. So at that point, the S&P 500 will become officially oversold, and we want to continue, consider buying it at that point. So, what's the prediction? No way to tell, but definitely I want to look for these levels, and if that level is hit, I want to consider buying it. Right this instant, I don't really want to buy it yet. If we look on a shorter term chart, this is a 4-hour chart, so each candlestick is 4 hours worth of activity. These are S&P 500 continuous futures. So when you are analyzing something on an intraday chart, so less than 24 hours, like for example, this is a 4-hour chart, so 4 hours, each candle is 4 hours worth of activity. So let's just take a look at this chart a little bit, and I marked this up and down arrows. I marked where I would be thinking about buying, where I would be thinking about selling. So notice there was a lot of whipsaws, like going back to January of this year. Initially it was bullish, and then actually there was another whipsaw right there, and then it was a little bit bearish, then another bullish outbreak, another bearish, another bullish, another bearish, finally. So then finally around March 1st of this year, we finally got a definitive bearish signal. So notice this breakdown, and basically every time we break down below this red support resistance line and make a lower low, and then we bounce back and we again touch the red support resistance line, and then we close below it. Basically that's our signal to sell it. So notice I marked these episodes where we saw at least a high or possibly a close above the blue line, and then a close, above the red line, and then a close below the red line. So when we are in a downtrend, we need to use the red line to sell short if we want to do that. And notice that basically with this type of trading would have been working quite well. You would have made a significant amount of money by just selling it short basically. And right now we are at these are 6 months lows. So this is the price we've seen back in September of last year, 2025. Where is this going? I mean, the way these candlesticks look, these 4 red candlesticks, they definitely, this last ones right here, they definitely look overextended. However, a weekend is upon us. The news are scary. We have troops heading into the Middle East, into the Iran area again, and I'm struggling to find good news. The only good news I read the other day, or today actually, was about a female whale giving birth to a I don't know how to call it, a cub, I guess. A baby whale, and it was for the first time filmed ever. It was never filmed before. So this was the good news that I read. Unfortunately, it's not really related to politics or war or anything of that nature, so I can't really give you good news there. But looking at this doesn't look good. However, what's good about this is definitely overextended. Okay, so let's look briefly at some of the market breadth indicators, and I just wanted to kind of go over some of them. I'm not gonna go through every single one. Okay, so this right here is basically the more important one. It's a 10-day exponential moving average of the advanced decline line. So advanced decline line is calculated as follows. We take the number of stocks going up. From it, we subtract the number of stocks going down. We get a number, and then we take a 10-day moving average of that number, and then we plot. So on this chart, what we're seeing is an actual 10-day exponential moving average of the advanced decline line. Okay, if it didn't make any sense, then you can go to StockCharts.com and there's an explanation for that. So notice that on two occasions in the past couple of weeks, we became what's called strongly or deeply oversold, where we got down below the negative 600 levels of this advanced decline line. We're currently around minus 400, 431. So we're definitely at least mildly to possibly strongly overextended to the downside. And I think, again, as I was showing, if we hit this blue support resistance line, then we would be oversold on two parameters. We will be oversold using my lines, which shows levels of importance, and we will be oversold on the advanced decline line, because it would be again most likely below the 600, negative 600 area. So this is basically what we're seeing. We're seeing stocks push lower, but at the same time, you know, some of the markers are showing levels that are not sustainable for a long time. So when stocks become such deeply oversold, eventually there will be at least a counter trend, at least a attempt at a rally. So unless you know, during the weekend another surprise hits, like another invasion of Venezuela or something else of that nature, there could be just like a gap up in the morning. So like, for example, we open, you know, we closed at 6,350, maybe we gap up to like 6,400, especially if nothing, you know, nothing terrible again happens, like no ground invasion, although that is getting more and more imminent, if I'm reading the situation correctly, which is kind of scary if you ask me. But anyways, so unless that happens, I think we will see a gap up. We will like gap up to around 6,400. That's my best prediction for Monday or Sunday evening start. What do you guys think? Make a comment. Let's move on to some of the other sectors. So I wanted to show what a definitely oversold level looks like. And this is Dow Jones. Dow Jones Industrial Average, the good old Dow Jones. So this is what I'm trying to explain. See, notice how we just hit this blue support resistance line. So Dow Jones is officially oversold. So now that we can make a low below it and then close above it, so low below, close above it, and then we can, you know, start considering selling. So this is Dow Jones Industrial Average ETF. So the level is 451 or so, 450. I think you need to multiply it by like 100, if I'm not mistaken, to get the actually, it's easier. We can look at Dow Jones. See how it's already below the blue support resistance line. This is an actual index. So this is showing oversold levels for Dow Jones. A close back above the blue support resistance line would imply a new buy signal. Oil, of course. Well, actually, before we get to oil, let's look at some of the. I wanted to show you Europe. So it's worldwide. This is worldwide. Here's Europe 50 index. Notice already deeply oversold, or strongly enough oversold to be, you know, considering buying it basically. So looking at oil, here is oil again. So you can see that March 2nd and 3rd were basically the 2 days where you could have bought oil futures at around like $70 and then did nothing for a few days and became very profitable, because this would have been, you know, like $30 to $40 run. Even right now, notice at this level, so blue line is at $95. This is light crude oil futures in United States, but Brent is similar, I believe. Brent is actually even higher already. Notice that Brent, notice those buy signals around the blue line. You would have been buying somewhere around 92, and now you're at 106. So United States oil looks like it's lagging somewhat, but it is still, you know, oil futures. So I think this will become even stronger, higher, unfortunately, unless something happens, and I don't know what would happen to change that situation. Things are almost like they feel like they're spiraling out of control worldwide. And you know how it is with the pandemic, for example. We had a pandemic, and during the pandemic, it wasn't just like one country became sick. No, it was basically the entire world became sick. So, our world is interconnected, and I think that, we can't live in isolation. It's not a bubble, basically. We live in the same environment, so we must kind of respect that understanding. All right, so that's me babbling. So light crude oil, if I was trading it, I would be buying it. Okay. Obviously, oil companies just went through the roof. This is XLE, Energy ETF. From March 2nd, from March 2nd, it gained almost 14% at all-time highs right now. So oil companies are making money. Well, that's the only bright spot in the S&P 500. Oil and gas services and productions also making good money here. We were trading this one, SLB. This is used to be a Schlumberger. Notice that we actually were buying SLB back in December, or even early December, late November here. Maduro, Venezuela operation right there, Monday, 5th of January. And now we're again at records. So, oil and gas companies are, are making good money, basically. Okay, well, again, let me know what you think about oil and gas, and let's move on to Forex. So, here's Forex. So, when we trade Forex, we usually trade it in currency pairs. So, for example, this is currency pair ETF, US dollar. I'm sorry, it's just a currency pair, US dollar divided by Japanese yen. So, US dollar on top, Japanese yen on the bottom. So, in this case, when it's going up, US dollar is winning the battle. I can look at futures, but the futures unfortunately don't go back far enough. Like this is USD JPY from FXCM, the exchange. And if I go to futures, I can so Japanese yen. So the futures only go back to 2001 rather. So I will stick with the Forex pair, even though it's counterintuitive. Again, USD JPY, USD on top, Japanese yen on the bottom. So right now the USD is ascendant. USD is winning. So the level that we're going back to, we're about to touch the level not seen since 1990. It was that far back. In other words, Japanese yen is actually collapsing, as I just showed in the futures. So there's the futures basically, on this chart it's an all-time low. Okay, but because of the currency pair, we are seeing this as a high for US dollar versus Japanese yen, not seen since 1990. So we're very, very close. I think, let me see, where is it? So right now, we're like that far away, like maybe 2 percentage points away from hitting those levels. So that's one of the components of the US dollar, Japanese yen. Another component is United States dollar, is Canadian dollar. So here's USDCAD. So USD divided by Canadian dollar. Canadian dollar was preponderant, so it was pulling this currency pair lower. But then look what just happened just now. Okay, so literally today we're seeing a breakout, or at least a very close attempt at a breakout above this blue support resistance line. So once that happens, it would imply a new uptrend for US dollar versus Canadian dollar. In other words, US dollar will be winning this battle against the Canadian dollar. Again, a little bit counterintuitive if you don't trade Forex, but here it is. This is New Zealand dollar versus US dollar. So in this case, the currency pair is reversed. We have US dollar on the bottom, New Zealand dollar on the top. Okay, notice the same thing. New Zealand dollar is failing to US dollar, and today we're seeing a new breakdown. In other words, United States dollar, since it's on the bottom here, US dollar on the bottom, it's pulling this currency pair lower. Additionally, we just closed below this red support resistance line, meaning that we're now, technically speaking, in a downtrend for this currency pair. So downtrend for this currency pair implies dollar itself is winning this battle. So let's look at the dollar itself, dollar currency index, DXY on TradingView. And until very recently, and technically speaking, still we're supposedly be in a downtrend. Down here in January of this year, I was already suspicious about this downtrend, and notice that we broke out above this red support resistance line on the 3rd of March, basically a day after invasion, and we continued higher. We're now approaching this blue support resistance line, and that's again a bull market for the dollar. So bull market for the dollar implies higher highs and higher lows for it. Okay, what does that mean in general for other currency, or for other asset classes? So we trade gold. So gold is also can be thought as a currency pair. So XAU divided by USD. If the US dollar, just like I showed you, is now ascendant, it's now getting more expensive, then gold divided by US dollar will be pulled down by this stronger dollar. We're seeing that exactly from when the war broke out right here on 2nd of March, end of February. We saw a collapse for gold over, significant, as much as 24% move for gold. We're now below the blue support resistance line, so technically speaking, we're oversold. But if dollar continues what's it doing, then we may not see, it may not be such a good idea to be buying gold and gold miners right now, because stronger dollar will continuously weigh on the precious metals. Here's GDX. Here's GDX, and same thing. Basically it hit an all-time high here on March 2nd and just unraveled. We're still waiting to see which way things will go, but it doesn't really look good either. If gold continues lower, then gold miners will also continue lower. A bounce could happen. We just don't know if it's going to carry it to new records or not. Silver's even worse. We're now toying with a outright bearish levels. Excuse me. So bearish levels. Notice that on 23rd of March right here, we actually touched those bearish levels at $63. A break below those levels would imply a bear market for silver. So we're very, very close already for that. And that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up for one of the products. So again, if you need the indicators, these are the indicators you can see on this chart. There's green, blue, red, and yellow lines. They are available for TradingView.com. Once you open a free TradingView account, come back to my site, MasterChartsTrading, sign up, and I will open the door for you. If you just want the newsletter, so the newsletter is available And I send out daily alerts and weekly members only videos. During the bull market we buy, but during the bear market we sell and short. So yes, there are opportunities both ways. Sometimes there's during the bear markets we continue trading, we just reverse our thinking, that's all. And again, the best deal is to get both trading indicators and newsletters. I have yearly and monthly subscriptions. So monthly subscription is $59.95 per month for the best package. But if you get the yearly subscription up front, then you get 17% off or 2 months free. You save almost $120. Don't forget, you also get a free 7-day trial, so you can always try it. If you don't like it, you can cancel it, but nobody ever does. So thank you for watching. If you haven't yet made the comment, please do so now. Hit the like button, share this video. Thank you for watching. Have another great trading week. Bye-bye.